heightened throughout the first quarter. And I think will we see a fall in the markets? Here's the other dilemma I'm looking at, and something I'm focused on, is the 2-year and the 10-year bond yields in the US. If interest rates are going up, the short end of the yield should start to rise, right? And at the moment, there's only 80 basis points difference. If you get an inverted yield, which wouldn't be surprising, then that indicates, as always done in the past, that we could be heading to recession. So the 10-year bond yield is telling me there's something not right because it's not moving higher. So that could be that the tightening interest rate hikes is coming at a time which could hurt the economy more than the market's expecting. And that's why you could see a further deeper sell-off in the first quarter.
The one sector which was the only one actually which was a big sectoral gainer for the week, and bulk of those gains, by the way, came on Friday on the back of what Accenture did Thursday night, and stocks soared. Sonia is here with a quick recap of the sole winner this week. Sonia.
Accenture reported a very, very strong Q1, and not just that, they went ahead and raised their FY22 full year guidance as well. Now, just to put the numbers in front of you, for Q1, Accenture's revenues went up 27% at $15 billion. The EPS at $2.78 was up 20% year on year. Not just that, the new bookings came in at a record $16.8 billion, which is a 30% growth that we've seen in dollar terms. And the operating income grew as well. But more importantly, the company has raised their business outlook for FY22. They now expect the full year revenue growth of 19 to 22%, a handsome growth in FY22. Morgan Stanley says that it was a material beat on earnings and positive commentary on demand. Credit Suisse has put out a note where they say that the management sees a healthy pipeline in spite of record bookings, and 1/3 of the industry has now implemented a compressed transformation, and this is a strong multi-year cycle of growth. Infosys, TCS and HCL Tech are the preferred picks in the IT services space.
Sonia, thank you very much for that. Andrew, is that a space which could, COVID, no COVID, as we've seen earlier as well, play out well from here? We all seen the magnitude of Accenture's beat at that scale and size.
Yeah, no, I think even before Accenture came out with this, given the kind of difficulties we're seeing for markets, then it's always a place to hide IT, right? Because it's a defensive sector. It's been kind of not doing as well in the past few months, but I think that's kind of a more of a bounce from where we were. I think the tailwinds are there for the sector, digitization. Whether that's going to continue. That's great for the telecom industry as well. The metaverse, all of these things I think are playing into the technology sector and the IT sector going forward. So I think you will see more movement towards defensive sectors in the next few months if this continues. And I think the other thing about FIIs, which I know you've been mentioning there, is that two things. One, yes, they will take risk off the table because of higher interest rates globally. And don't forget, at some point, India with its current account deficit will also face those kind of higher borrowings as well. So that's something I think FIIs will be wary about. And the fact that, China has, in terms of its regulatory problems, kind of slowed down a bit. And it's a much cheaper market than India. So I think we are seeing a shift from India to China and other emerging markets, which are looking cheap compared to where we are today.
Mm-hmm. Andrew, so finally, if indeed, as you predict, the first quarter of the new calendar, if it does bring lower levels, then apart from IT, what else would you go to in the market? What else would you pick? For instance, there's not such a huge run towards pharma this time around, even though we have, health worries, etc. So what would be the other go-to areas in the market?
So I think I would look at FMCG. I think that's the only other place I would probably want to hide in the very short term. So those two sectors, and selective pharma as well, because I don't think, again, that there are tailwinds for the pharma sector, which are multi-year, not just over a short period. So IT, FMCG, and selective pharma is where I'd be hiding.
Andrew, it's always a pleasure. Good hearing your views, and thanks very much for your time here on CNBC-TV18.
Thank you.
Thanks indeed. Well, we told you what's happened as far as the week is concerned with Sonal, but, what's the overall damage after this sell-off that we've seen? Mangalam is standing by to take stock. Mangalam.
Well, it has indeed been a market sell-off, in fact, not just globally, but locally as well because of those global factors. Let's talk about that. Let's map this decline. From the highs, the Nifty is down 9%. The Nifty Bank has fallen 15%. And we've seen a big decline in the mid-cap metals and PSU banks. The indices that were the stars of the first half of this year have also come off a fair bit from the highs. The three reasons for that. The first one, the constant pull-out of funds by the FIIs in the cash markets. October, November, December so far. Put all these numbers together, you have 90,000 crores pulled out of the Indian cash markets by the FIIs, and that's causing the pressure. The second pressure is that the global tap of liquidity that central banks had opened is now being tightened. The US Fed has announced a faster taper. The ECB has gone ahead and said that they will wind down their asset purchase program, and the Bank of England has actually gone ahead and raised their interest rates, the first that we've seen since the onset of the pandemic. And talking about the pandemic, that's not done yet as well, because UK had reported close to around 89,000 COVID cases in a day. That's the highest, and on a low base, even Mumbai and Delhi back home have actually seen the highest new COVID cases in a month. So all of that brought with it a fair amount of uncertainty, and uncertainty is not particularly good when the valuations are high. At the peak, the Nifty was trading at 22 times FY23 earnings, and even after this decline at 20 times, it is higher than its previous averages. What also did not do well is that towards the end of this year, with the gains that we've seen already, there was a fair amount of profits to be taken home as well. So profit booking exacerbated that fall. Even if you account for the decline that we've seen on the market so far, the Nifty is still up 22% this year. The Nifty Bank, which has been an underperformer, is still up 15% this year. And the mid-cap index is up 45%. A lot of stocks are sitting on huge gains. So maybe case for some profit taking, and that's causing the markets to sell off.
All right, Mangalam, thanks very much for all of that data and the analysis there. We will take a break on that note. On the other side, we talk technicals. Jay Bala of Cash the Chaos joins in to put this fall in perspective.